Welcome back. Let's get down to business. We're an economic war room, not an economic rollover and take it in the pants room. Sure, there are problems, but there are also solutions. Starting at the top, the first problem that led to the financial crisis was inflation driving interest rates higher. So what's the solution? How about gold? Gold is, after all, the original money, according to our founders and according to the Bible. So how did gold fare during the recent inflationary run-up and banking crisis? Take a look at this chart from goldprice.com. It's a 6-month chart. As you can see, the banking crisis was good for gold. Its value rose even when there was a crisis in Silicon Valley Bank and inflation. Now, there's no guarantee that this works every time or in the short run, but historically, gold is viewed as a safe haven asset. Now, I'm not recommending gold or giving you advice to buy it. You need a good financial advisor for that. It may not fit your situation. I'm just noting that in times of distress, it's worked and worked well. The second problem that we've talked about is fractional banking and bank runs. What if you could hold your money on deposit somewhere, but they didn't loan it out or invest it? That would end any bank run risk as long as the institution was truly safe. The third problem that we mentioned was wokeness. But what if you could put your money in a place that woke was less likely to penetrate? That might not be California, but maybe Texas? At one time, I worked in California, had a vacation property there. But starting 20 years ago, we decided to be full-time Texans for a reason. The fourth problem that we mentioned was the FDIC insurance. Now, that's not really a problem, but what if instead of the FDIC having coverage with limits and somebody deciding whether or not that limit covered you, you could have Lloyd's of London insuring 100% of your deposits, and you had a sovereign state standing behind you as well. The fifth problem that we mentioned was economic warfare. But what if we could have a safe haven that China could not touch? And on the domestic side, what if we had explicit guarantees in the Constitution that prevented the federal government from meddling in your bank account? The good news, we've been working on a plan that does all of that, and it soon will be up for a vote in the Texas legislature. It's gold and hedged from inflation. It's 100% backed. It's not fractional. A bank run could never touch your deposits. It's in Texas using the Texas Bullion Depository. It doesn't need FDIC coverage, but can get private insurance through Lloyd's of London because the existing bullion depository already has that. And it's insulated from both foreign and domestic economic warfare. Article 1, Section 10 of the Constitution makes a special provision for this kind of money. If you've watched our episode 224 earlier this year, you know exactly what I'm talking about. We called it the gold bullet for CBDC, or the Great Reset. Now, we have a bill in Texas sponsored by two conservative heroes, one in the Texas House and the other in the Texas Senate. Let me read a little from the legislation. It says, a bill to be enacted, an act relating to the establishment of a digital currency backed by gold authorizing a fee. That's a little misleading. Actually, it is gold. You're able to transact in gold. Being enacted by the legislature of the state of Texas, Subtitle A, Title 4 Government Code is amended by adding this. Digital currency. In this chapter, digital currency means the digital gold currency established under this chapter. The comptroller may adopt rules as necessary or convenient to implement this chapter, including ensure the security of the digital currency and preventing fraud. Basically, let me explain that to you. It's a Senate bill written by Brian Hughes in the Senate number 2334, and in the House by Representative Mark DeRazio, House Bill 4903. What it does is it authorizes the comptroller to take the existing Texas Bullion Depository, to take deposits in the form of cash and buy gold with it, or directly in the form of gold, and then make those deposits transactional. So you could take a debit card with you to dinner and pay for your dinner with gold, not with U.S. Treasury notes.